So I want to start by thanking you all so much for being here tonight and helping us seek ways of reviving the thriving small cap IPO markets of yesteryear. For those of you who don't know me, my name is Dara Albright, and I'm the proud organizer of today's program. For the past few years, I've dedicated my career to organizing events such as this that introduce new crowd-driven financing structures and asset classes to Wall Street. And tonight, we will introduce the new Reg A crowd-financed offering and discuss ways to structure, market, and create liquidity for not only Reg A offerings, but for a whole new generation of retail-oriented small-cap financings. I'm truly honored to be joined here tonight by both yesterday and today's industry trailblazers. In addition to an incredible lineup of speakers, who I will introduce momentarily, I want to acknowledge also some of the icons in this room who decades ago helped turn an obscure small-cap marketplace that we all know as NASDAQ into the crown jewel of American capitalism. And the reason why you were able to do this and do this successfully is because you made sure that the people's capital was able to reach the innovation of the day. And it was because of your efforts that companies like Intel, Microsoft, eBay, Apple were all able to access the capital that they needed to change the world. And also, you enabled all investors, not just the financially privileged, the opportunity to build wealth through stock appreciation. Now, although the rules have now changed, the mission remains the same. Today's industry pioneers are proudly following in your footsteps, trying to ensure that the investing public is able to access similar types of growth opportunities. So a couple of weeks ago, I put together this. I know it's really small. You can't really read it. But it's basically a slide that I think is really interesting because it shows the direction of the stock markets. And it's really by showing the evolution of how deals are marketed, you could really understand and see the enormous impact that both legislation and technology is making on the markets and has throughout history. So you could also download this at daraalbright.com, and I just wanted to point out just a couple of glaring items on this chart. What it really is telling that we've seen institutions grow more massive over the past 50 years. And to the point where in the 2000s, they've basically monopolized allocations and the markets in general. And it's important to note that, especially during this time, we saw regulations that were aimed at protecting the retail investor, and although they were well-intentioned, they accomplished nothing but shutting him out of growth opportunities. So basically what these regulations have in fact done was make it so burdensome, so risky, and so expensive for BDs to even want to do business with retail investors at all. Fortunately, we're starting to see a reversal of this trend thanks in part to lawmakers such as Congressman McHenry, who's here with us tonight. We're also seeing sophisticated marketing technologies being introduced to help strengthen the connection amongst issuers, investors, and intermediaries. And this comes at a time when what we're seeing is this new breed of retail investors, known as crowd investors, on the rise. And they're starting to demand access to the same growth opportunities afforded to accredited investors. And so what's happening is that today Wall Street is in dire need of new financing structures that are conducive to both retail investors and emerging issuers. So this past December, as you all know, the SEC proposed new rules to the Reg A exemption and surprised the industry by suggesting that they exempt Reg A from blue sky laws. So what we have now is, with the fate of Title III looming, Title II excluding small investors altogether, and interstate crowdfunding really bearing harsh penalties for inadvertently offering shares beyond state borders, what we're seeing is blue sky preempted Reg A crowd financings could very well be the most pragmatic solution. And especially in coordination with building a lawyer shareholder base that you get from crowd investors, and with a flourishing secondary market that Dave Wield is going to approach and talk about at the conclusion of today. So tonight we have with us key architects of the Jobs Act. We have Congressman Patrick McHenry and Dave Wield, Chairman of IssueWorks and former Vice Chairman of NASDAQ. And they're going to highlight some of these legislative solutions for retail-oriented offerings as well as secondary markets. We have some of the industry's most influential legal minds here: Brian Korn, Samuel Guzik, Lou Taubman, Doug Ellenoff, and Sarah Hanks, and they're going to debate the merits of Title II, Rule 147, Titles 3 and 4 as proposed. And then we also have leading marketing and data experts, Steve Dresner, Gene Massey, Matt Henninger, and Chris Tyrell, and they're going to talk about some innovations in securities marketing which are designed to really help issuers, intermediaries attract the mounting retail crowd. So it's with great pleasure that I introduce our first speaker. He's a legend in crowdfunding circles. Most of you know him for introducing the original crowdfunding legislation in the House in 2011. And we are lucky to have him on the Hill advocating for smaller investors and smaller businesses all across America. Tonight, he's going to discuss some of the initiatives that he has in modernizing securities legislation so that they are up to date with technological progress and these changing market demographics. So with that, it's my honor to hand the podium over to Congressman Patrick McHenry.
Appreciate it. Thank you. Dara, thanks so much for your leadership and hard work on capital formation issues, and thank you for organizing tonight's event, and thank you all for being here. It's a real pleasure to be with you today, and actually off the campaign trail. With a national election in 2 weeks, it's nice to have a little relief and talk about something else, for heaven's sake. So, and I'm in a state where the Senate race is going to be the most expensive in the nation, in the state of North Carolina, with about $100 million being spent on television and the mailboxes and everything else. So I am grateful to not be at home watching TV. So if you think it's draining for you, imagine that I do this on a daily basis. So anyway, thanks so much. Honor to be here with you, and certainly appreciate all the work that you've put into, a number of you have put into improving our securities laws. And Dara, you've got just quite the who's who, from David, who was in the early stages of the Jobs Act and in the discussions we had in Washington, and really helped form some of the key architecture of the Jobs Act. So very grateful that you're here and for the work you're doing. Sarah Hanks with CrowdCheck and all the work that you're doing as well, and trying to move the process forward to make sure we have some credibility in the marketplace. But you know, we've got Doug and Sam as well. So I mean, you're going to hear from really great folks, and I'm glad, I'm honored to be a part of it. But I want to get to your questions. I want to run through a couple things and give you my thoughts on the state of play as they currently exist. The Jobs Act was quite a significant change in the approach of Congress and Washington over the last couple of years. I don't have to tell you that not a lot gets done on a daily basis with the House and the Senate and the White House as things currently stand in Washington. And so there hasn't been, in the way of significant legislating in the last 3.5 years. There's been this notion of gridlock in Washington, which is a very well understood by the American people simply based off of the work product that they get to witness or not witness. But one key thing happened in the last 3.5 years outside of crisis mode of dealing with tax law and spending issues and keeping the government open. Really difficult to judge Congress simply based off of showing up on time and punching the clock, right? The one key piece of legislation that's occurred in the last 3.5 years in this divided Washington is the Jobs Act, the most significant rewrite of securities laws that we've seen in the last 40 years. It's a very significant achievement and done in a very divided Washington. The great hope for the Jobs Act, and the greatest hope that I had, was in Title III with crowdfunding. I've shifted my focus, as I'm going to tell you, to something else, and this is how we'll close tonight. But the idea with the Jobs Act is that we focus the SEC more on capital formation than just investor protection. They have two mandates, both investor protection and capital formation. Very important. We want the investors protected. But there also has to be the flow of capital to worthy small businesses and entrepreneurs, and that's been lacking. So you have three sections of the Jobs Act that deal with capital formation. Crowdfunding, Title III. Title IV with lifting the ban on general solicitation. And finally, Reg A is Title IV, and lifting the ban on general solicitation is Title II. So Reg A, general solicitation, crowdfunding. So the ambition of equity crowdfunding is to simply update outmoded securities laws and ensure that we have this merging of tech and the securities world. This is the work that I've put in, a significant amount of time in Congress to make sure that we got this right. We did not get this right. At the end of the day, the law is deeply flawed, and the SEC is now, after having a rule hang out for a significant amount of time, a proposed rule, we don't see much in the way of action. Well, Congress has to do its job and fix what is a flawed law, and the SEC has to work with us to make sure the regs are fitting in terms of the cost structure. I agree with you, and many of you talked about this. The cost structure is simply well beyond what the market can bear reasonably for this crowdfunding initiative to move forward. The question of costly audits, the communications limits, the issuance limit up to $1 million, the lack of flexibility for intermediaries, and the prohibition on testing the waters, just to name a few. I care very deeply about equity crowdfunding and getting the law and the rules right. They currently are not close to being right. So the reason why I'm here to talk to you tonight is, you all well know the lifting the ban on general solicitation was a very straightforward piece of legislating within the Jobs Act. I don't have to go into much detail with that, but the combination of lifting the ban on general solicitation plus a well-written Reg A, right? This is my prime focus, is to make sure that we get the rules done correctly so that Reg A doesn't have to be a dead letter. It can actually be a lively opportunity for capital formation. When Congress moved the limit from $5 million to $50 million, it was a significant change. So this question for Reg A is what we should be focused on here tonight, because that is where we can fix the question of crowdfunding, because we have great opportunities there. Now, I also think that there are really three legs to the stool of this alliance, and that is Congress and the SEC getting this question of regulation and law correctly done, but you also have to help galvanize this democratization of finance. That is a significant amount of cultural shift that we have to have in the marketplace, and you all are going to be the drivers of that. But as a part of that, you have to make sure that we have good public policy in Washington, and I'll mention that as well at the close here. But the other piece that is very important for this is open, structured data, so that we can actually have the best information on the markets and the best market structure that can follow as a result of open, structured data. So the merger of what you're doing to democratize finance and that community that has been hard working on making sure we have open, structured data can help move Congress and the SEC in the right direction. So why are we doing this, right? Why are we working through this question of capital formation? I think it's because when we have capital deserts in the United States, we talk about food deserts in urban areas. When we have capital deserts in the United States, when we have great entrepreneurs that maybe aren't connected to the right side of the tracks in order to get financing opportunities, to get capital so they can take their idea to the marketplace, we know that something's missing. We have to adapt and change. It's hard to find the cause of that limitation because regulation is so difficult to ferret out its impact. But I like to use this analogy, not because I'm a big hockey fan, but it's the most apt analogy. If you're in Canada, born in Canada today, and you have the capacity, the skill to play hockey, Canada has a system to get those experts, get those great players, and give them opportunities, right? So think about it. There is no kid in Canada that's great at hockey and was undiscovered, right? Well, in the United States today, you have great entrepreneurs that are not able to break free because they're not connected to capital. We have to have that same mentality for entrepreneurs and for startups and for risk takers that Canada does for hockey. It's very important that we think about the practical impact of these regulatory structures on that Main Street, average, everyday individual and the impact we're going to have for them. This is not about Wall Street. It's not really about finance. It's about delivering that entrepreneur to the marketplace and connecting them with the world of capital so that we can all live better tomorrow and have real, vibrant economic growth. Now, wanted to go through very quickly this part of the discussion because, look, you're going to have experts that can get into the details of how we structure a good Reg A exemption or a Reg A rule, and I'll let them get into the weeds of that. The most important thing for me, though, is to ensure that you can actually communicate about these offerings. That you don't have to file in 50 individual states. This question of the 50 states blue skies law, we've got to resolve that, and there has to be a viable exemption from the SEC. I've been very, very clear with every commissioner of the SEC and the chair of the SEC that this must happen for congressional intent to be followed when it comes to Reg A. But there's one thing you can do as sort of a takeaway here today. And that is to make sure you have a connection with the policymakers in Washington. The SEC has an open door policy. They really do. You can go in and try to inform the staff on your unique experience, your ideas, and they will listen. They really will. They really will. But the other part of this process involves Capitol Hill. How many of you all personally know your U.S. representative? Raise your hand. Okay. All right, a few of you. Okay. What if you say, I know who my U.S. representative is and I hate him? Right? Okay. All right. So, for those of you who don't have relationships, right, go introduce yourself. Okay? Go introduce yourself. Go make a connection with your member of Congress, your senator. If you know your current congressman and don't like that person, then adopt someone else that is fitting with your perspective, then it can help move this process along. Inform them about what is sound public policy when it comes to capital formation, and let them know that they can call you for expertise and to help them answer policy questions. And if you really like them, you can help them on the political side too. But it's not all about the political side. It's about sound public policy for almost every member of Congress, Republican or Democrat. So build those relationships. That's the final takeaway that is so important. Because without those relationships, you can't actually take good ideas through this legislative process or push them in the regulatory regime that we currently have to deal with independent agencies in Washington. So I leave you with that one final thing. But Dara, if it's in keeping with your agenda, if we have time for some questions, I'd love to answer them. Yes?
It all boils down to Title IV covered securities, because if we don't get covered security status, it's going to be the same dead end that Title III did. And what's your and what I'm afraid of, it's going to be a compromise as some hybrid coordinated review that's going to be more of a facade than a real. I think that's the reality, isn't it?
Yes. And if you have secondary trading, then we're good, right? I mean, If they actually follow congressional intent, they will get it right. I'm very hopeful, and I do think Chair White is on the right track here. But if the SEC comes out with a bad rule, they're going to have to answer to Congress. They're going to have to answer in a major way, and I'm not going to let up. Yes, David?
Hi, Congressman. Just to paint a little bit of a picture of what's going on in the Senate. There's been quite a bit of legislation that's been pro-capital formation that's made it through the U.S. House of Representatives, mostly pretty bipartisan, I think.
Mm-hmm.
And then we never see a counterpart make it to the floor of the Senate. Is that fair?
It is. And look, there's a partisan divide in Washington, sure, right? But there's a divide between the House and the Senate, right? Regardless of party. Now, the Senate has not been able to successfully take many bills across the floor, if you will. They're not able to actually really debate the substance of a lot of legislation. We've got just over 360 bills that are sitting in the Senate that came out of the House with bipartisan votes. It's very significant. 360. They won't take them up. So I think many senators are frustrated by this process, or a lack of a process. And I think we're 2 weeks away from a national election. It depends who the next majority leader is in the Senate. If it's Harry Reid, we'll have sort of a similar process that we've had in the last 3.5 years in terms of how the Senate operates. If it's Mitch McConnell, look, I'm a Republican, so I mean, this is not probably groundbreaking for anyone to hear this. that I'd rather have the Republicans control the United States Senate, right? But Mitch McConnell is pledged to actually bring up legislation and let people vote, which is troublesome. In the House of Representatives, we cast thousands of votes in a 2-year Congress, and we have to be held accountable for every dumb idea that we've had to vote on. With all due respect to my colleagues, and so in the House, we're very accustomed to answering for a wide variety of votes. In the Senate, they haven't had many votes, so they don't have to answer for many things, right? So McConnell is saying that he will bring legislation to the floor. He will have the amendment process. It will be maddening and frustrating for a lot of people. But he said, at the end of the day, we're going to have this sort of process and let the body work its will. I think that's a healthy thing. And I think that means that we can actually get bills through the House, the Senate, and to the President's desk that may not be perfect, but they'll be products. We'll be able to move this process forward and hopefully move it in the right direction. Yes, Barry?
Well, speaking of the imminent election, I mean, how do you think that if there is a changeover, how is that going to affect the Jobs Act, and particularly even the Jobs Act 2.0 that you've been introducing?
Substantially. I think if you look at the Jobs Act, and especially this question of equity crowdfunding that I've been engaged in, I think that will bring more people to the table, right? That you're actually going through a fruitful exercise in the House because the Senate is now operational, right? Now, it's an open question how operational they'll be, but I do think you'll be able to see smaller, maybe not as large as the Jobs Act, but individual pieces of policy move through the House and the Senate to the President. And there's really no partisanship when you come to a question of capital formation. You just have differences of perspective and experience. It's less about ideology. So I do think we'll be able to get some reasonable things through this process and on the President's desk. Really do. Yes, sir.
How can the SEC have more power than the Congress? How can they forgive my ignorance, but how can they hold up something for so long after Congress has implemented the law? Why can't the Congress make them do something?
Well, because the Congress can't make themselves do much of anything. Right? Think about
But it's a law. It's a law now.
I understand.
You passed the law, it's signed by the president. How can the SEC hold it up for 2 years?
Well, the same way that, Well, people ask, well, why is the Senate not gotten anything done? And I said, well, that's more tradition than anything. So, this is one of the big problems in Washington. There's not much that goes through the House and the Senate. We've not had your traditional legislative process, where the Senate has a perspective and the House has a perspective. We appoint a conference committee to reconcile those differences, right? How imperfect it may be, fine, but you have a conference committee to reconcile those differences, and then that final product is voted on by both houses and goes to the president if it passes muster. We haven't had that type of process. And out of that vacuum, agencies have not been held accountable. And I would dare say the checks and balances between the legislative branch and the executive branch have greatly eroded based off of that inability for Congress to have a position. You have a House position, a Senate position, you don't have a congressional position. And that's one of the great problems here.
So when the SEC is getting letters signed by 6 senators against certain aspects of the Jobs Act, the SEC says, hey, what do you want us to do, right? Is that where the problem lies, that inability to get along?
Yes, that's a component of it. But I think that would be a significant change. If you're a commissioner of the at the SEC, you'll have to answer more questions on Capitol Hill if the election turns out like I think it will, where you have both a Republican House and a Republican Senate. And I think that way you would actually see more pragmatic policy, I think, sort of moving from the left back to the center somewhat. And I think that will be far more positive. Now, the other component of this is frequent congressional oversight and hearings. There's nothing that is a greater disinfectant than sunlight, obviously. But there's no greater spur to action than embarrassment. And when an agency is embarrassed for inaction, when they have to answer in a public hearing, it might spur them to act before they have to, go before 60 members of the House Financial Services Committee, or the 20 members on my subcommittee, and answer hours of questions about why they can't get things done. Yes, sir.
Hi, thanks for speaking, Congressman. My name is Sri Basham. I'm the founder of EquityZen.com. One trend that I've seen is that private companies are delaying or putting off their IPO or other exit for a while, and the impact, particularly with venture-backed companies, and the impact has been that retail public market investors are missing out on a lot of value to the private markets. And those who are winning are large institutional investors, venture funds, private equity funds, and their institutional limited partners. Just wondering your thoughts on how you think we can harness Reg A Plus or other existing or proposed regulations to improve access to some of these companies, either through the lighter touch of Reg A Plus or through other ways where now the left out folks in the retail public markets can now recapture the value that has been put off with large venture-backed companies delaying their IPO and becoming public at a multi-billion-dollar valuation rather than a couple $100 million.
Well, there's that vacuum for startups before they get to the public markets, right? And so that vacuum should be filled by Reg A, I believe. I mean, that's congressional intent, that you have a stair-step approach. In my world, and in my perfect view, is you have equity crowdfunding up to a $5 million, $10 million limit. Then you can stair-step into Reg A Plus up to 50, right? And then you have a variety of other offerings that can then graduate you to the public markets. I have no aversion to the public markets. I just think that we have to deal better with small cap companies that are in the public markets and maybe that are sitting there and are taking wild rides just based off of different movements in the marketplace. Bad news, good news, thinly traded, very little information on those small cap companies. But also those folks that are trying to get there. It's not all about VCs in Silicon Valley. It's about great ideas that can get a very nice return, not the kind of insane returns we see from some tech stocks that people believe are sort of realistic for average companies. So the question is, how do you actually get those public markets interesting enough and enticing enough for small cap companies to go that direction? Right? David and I have talked about this question of tick sizes, right? So the idea that you actually have a different segmenting of the market for small cap companies. So there is the ability for a market maker to actually make a market in these small cap companies. Part of that is data. Part of that is substantive real data, and the SEC has to do a much better job of getting this data so average investors and sophisticated investors can get better information. The fact is, I can get more information on a fourth option wide receiver in my NFL fantasy league than I can for a $500 million company. That is absolutely insane. And we're supposed to be the leader in capital formation in the world. That is absolutely silly. Actually, what's really silly is the fantasy football league that I'm talking about. Right?
Just a quick follow-up. One of my concerns around equity crowdfunding is, particularly as it exists now without the proposed rules become final, is retail investors, they might not have the investment timeline that's currently required by private placements. So, and depending on how Reg 8 Plus might go, how do you see a place for secondary markets that might help ease this up to allow retail investors who can't wait 6, 7, 8 years for an IPO to be able to trade out of position via Reg 8 Plus or otherwise?
Well, that's a question of secondary trading, right? And I think that's something that we're going to have to work on in a Jobs Act 2.0. I think there's a lot more work to do. And if the SEC is not willing to do a thorough review of these exemptions and use the authority they currently have, Congress will legislate it. We showed it with the Jobs Act. 100% of the Jobs Act could have been done through a commission-level decision at the SEC. And it should be thoroughly embarrassing for an agency that is robust and renowned as the Securities and Exchange Commission to have Congress, who can do much of nothing on a daily basis, fully rewrite a section, a substantial section of our securities laws. What final question? Yes, ma'am.
So you talk about lobbying our congressmen and senators, but there's a body, NASA, who is very influential in this space as it relates to small securities offerings. So how do you think we should balance the discussion with that organization, their influence on all of the states in terms of pushing this bill forward?
This is a very good question, and I'm really sorry I called on you. The first thing we have to make very clear is that we care about investor protection. I care very deeply. I don't want my constituents ripped off. I don't think anyone in this room wants to rip off their fellow investors or undermine credibility in our markets. NASA has come forward and has a very strong lobbying effort. I believe they have a very good reason why they need to lobby on these issues. Number one, they're very strong regulators, and based on their strong regulation, they are stifling capital formation. Number one. Number two, they have a revenue stream. And I believe that they have a very sincere interest in protecting their strong regulatory regime in order to maintain their revenue. And I believe that that is the reason why they're so actively engaged in this process. So I get it. I'm not unfamiliar with it. It's Washington, after all. There's a lot of lobbying that takes place based around people retaining their power and their income streams. And that is, in fact, what is the case with these state securities regulators. Republican or Democrat, they want to keep their existing power and regime. Things are changing. And they're going to have to come to the table and attempt to be reasonable because they approached me, just as an example. I brought forward the Equity Crowdfunding Act that we passed out of the House of Representatives with just right around 400 votes. Okay? And after we passed it out of the committee without a dissenting vote on the House Financial Services Committee, which means that Barney Frank voted for it, right? The lobbyists for NASA said that they'd like to negotiate. And I said, I mean, I don't know, I'd like not to sound like it's high school or anything, but look at the scoreboard, buddy. Right? You don't come to somebody who had no opposing votes, and they were able to muster about 24 dissenting votes on the House floor on what was my language on the equity crowdfunding regime that would have actually been successful. We would not be having these discussions about the failure of the SEC to implement reasonable rules and complain about the laws as it expresses. So there is a very powerful source called winning, and if you have better relationships than those that are on the opposite side, you have better information, and you're on the side of right and good and just, you'll win. But you also have to have the relationship, because just being right, good, and just and alone doesn't get you anything. So those relationships do matter, and when members of Congress and policymakers know that there's a competing voice here, I think the good guys will win. So, thank you. Thank you all.
Are you going to stay for? Okay, I'll walk you out.